And the price of rent has started to descend back to earth in much of the GTA. And the latest numbers from rentals.ca and Urbanation finds one-bedroom rentals are now at lows unseen since May 2022.
So for a close look at what's taking shape from rentals.ca, Associate Director of Communications, Giacomo Lattis, joining us. Giacomo, nice to see you again this morning. So we've talked about where the housing market's expected to go. We know the Bank of Canada is going to talk tomorrow potentially about interest rates. But in terms of rents, it's an interesting dynamic right now because according to your numbers, rents have come down, but landlords are asking for what would seem to be more than what they could potentially get here. Can you explain the gap here?
Yeah, the rental market is going, and of course, good morning. Nice to be chatting with you guys again. The rental market is going through a really interesting period of uncertainty here, right? Especially in the short term. Demand has really pulled back due to flattening population growth. And of course, with this economic uncertainty that's happening right now, people have less money to spend on new premium rentals or what these new rental prices are being asked for, especially when they're going on sites like rentals.ca. And when you couple that with all this new supply coming to the market, you get rents coming down as they have been doing so for a few years right now. You know, Toronto rents right now are actually the lowest they've been since May of 2022, which shows that demand right now is really, really low. People are not willing to pay the prices that Toronto rents were once at. It wasn't that long ago where the average apartment in Toronto was approaching $3,000 a month. Now it's around $2,500 a month. Still expensive, but not what it was.
Yeah. Okay. And when you talk about where it was, you know, the rent today, the average asking rent still is 3.4% higher than it was 3 years ago. Given the trend that you're seeing, this kind of rapid and consecutive rent decrease, I mean, we are now into a 14th consecutive annual rent decrease. Do you think it will ever get back to what it was 3 years ago or even close?
That's a great question. And if I had that answer for sure, I wish I could tell you. What I think will happen is more supply is coming to the rental market. That is a given. And at least in the near future, it doesn't seem like population growth is going to be at levels that we were seeing. Of course, a large pool of renters are not only international students, but the population we get with new internationals. That's just most of them are renters. And while these numbers are remaining quite low, that's a large pool of renters that are not coming into the market. And if you just visit rentals.ca, you might be surprised the amount of move-in incentives you're seeing because property managers have a really difficult time right now getting demand. You know, we're actually seeing on our site some of the lowest levels of prospects that we've seen since 2021. The demand is just not there right now. And when all the supply comes into the market, you see prices start to come down. But as you mentioned, they're still inflated from what they were a few years ago.
So, Giacomo, I'm curious, like when you talk about the potential over ask there on what the rent they're asking for, at the same time, there's all these incentives here. That doesn't seem to sort of, square. On the one hand, they're trying to incent people to rent. And on the flip side, they may be asking a little more.
Yeah, there's such a wide range of landlords and buildings that we're seeing right now. A majority of property managers and landlords we see on our site are small mom and pop shops, right, that only have a couple units. And of course, their prices to run these buildings have increased exponentially. So how do they deal with a market where rental prices keep going down, especially for a lot of these new premium rentals that they're trying to compete with? A healthy rental market is a small increase every year because that helps pay for the increased upkeep of these buildings. So small landlords are having a little bit more difficult time. These larger, more corporate premium rentals owned by larger companies can more easily afford to give away move-in incentives when that's not really the case for a lot of small landlords, which are a lot of Canadians. So it's a really interesting market right now.
Right.
Okay. And Giacomo, when you look at the types of rentals, where are you seeing kind of the most decline in prices that they're asking? Is it condos because they're so kind of infiltrated right now?
Yeah, condos are right now probably the least stable. Purpose-built rentals, while they are coming down a bit, they're much more stable than condo units. Of course, a lot of these condos we're seeing for rent on our sites were not built to rent. They're built to sell. So these developers are trying to recoup some of their losses a little bit by putting them up for rent. And at times, they are known to bring that price down a lot just to move these units. But as far as individual unit types, we're finding studio and 3-bedroom apartments are the most demand right now. 3-bedroom apartments, it makes sense because you can split the rent 3 different ways, have multiple roommates. And then studio, of course, are the most affordable. So those are still in high demand.
Okay, it's interesting to always dig into these numbers. Giacomo Lattis from rentals.ca. Really appreciate the time this morning. Thanks for helping us understand the market a bit better today. Thank you.